Dan, you say the rate environment is supportive of equities. We've seen a lot of broad selling. Looks like we're setting up for a risk off today in the Asia Pacific as well. So do you buy this dip?
I do. I think that this is a dip buying environment. I think overall what we've been seeing from our institutional clients is nobody has really been turning too risk off in this. We would support that. This is going to be an environment where we're worried about peak policy, perhaps peak growth, but I don't think that means peak earnings. And that's why equities can continue to advance here. We might not get the same liquidity boost, but to have that earnings growth continue to be supportive. And yes, we've got some margin pressure, but as long as we continue to think that that's, let's call it transitory or at least non-recurring for the long term, that can continue to support equities going forward, especially in cyclical areas.
Well, one market where we won't see selling today is China, because, of course, it's closed for a week, the Golden Week holiday. But a lot of pressures building up there, concerns around China Evergrande, now an energy crisis as well, weighing on growth. What's your strategy when it comes to China?
Yeah, China, we continue to be a bit skeptical that they're going to take a resurgent lead in equity markets anytime soon. There are a number of risks. Most important, I think, is this orchestrated, state-orchestrated slowdown in credit. They're trying to balance so much at the same time that we're getting worries about funding in high-yield markets, for example, in Evergrande, as well as an electricity issue. The one I worry about most is the electricity issue, the power generation issue, because that has probably the biggest potential for a knock-on onto global GDP. But until we're able to quantify some of these risks a bit better and actually see more supportive policy in a period where China had been trying to deleverage a bit, I would be a bit skeptical of outperformance from Chinese equities or assets overall.
And yet we continue to see the PBOC at least staying supportive to the financial markets. We continue to seeing them trying to really support confidence in the markets with those liquidity injections, as this GTV chart on the Bloomberg shows. So where in the economy in China does power crunch and the Evergrande issues worry you the most?
In the industrial centers, industrial profits. So you're absolutely right. We're starting to see supporting policy from the PBOC. It's just a little bit and kind of late at this point. It's a reversal of direction, and it's just not quite enough to support the expansion that we would need to see. The areas that have probably the biggest power crunch worries or have also missed some of their environmental targets as well. These provinces are something like 50%, the top four are 50% of GDP growth. And if we get a harsh winter on top of what we're seeing already, this has the potential to knock on to industrial production and the industrial companies within China, the manufacturing companies, to produce for the world, contributing to the shortage that we're already seeing from shipping and the margin pressures from energy. So this is, I'm more worried about the supply chain here than I am about the domestic China market in that respect.
When it comes to the regulatory crackdown that we've seen in China, could we start to see some valuations become compelling? We heard from Janice Henderson that at least the good news for China is that the sell-off was so big in tech that perhaps that's an entry point.
It's so hard to say. Look, we go through that discussion all the time as well. The trouble is, in order to value something, you need to be able to quantify the risk. And we can look at absolute valuations or even relative valuations to history and say that looks good. But if we can't quantify the risk to what's coming next, or where is the regulatory crackdown going to start and finish, then it's just very difficult to make a decision. So if you are a great company and political analyst within onshore in China, then I absolutely think that there are opportunities. We're not in tune enough to pick those stories out yet. So we're going to stay out of that mix for a little while until we get better clarity.
Dan, just finally, you mentioned you are concerned about supply chain issues. I guess on the one hand, Does it mean we're all getting vouchers for Christmas? But more seriously, does it mean this rate environment that you talked about being supportive for equities? Is the supply chain a really major risk for the outlook there?
It is. It certainly. For your Christmas question, seriously, I would get the shopping in now. That's something that I would do. But as far as the two issues, the biggest one on earnings, can our profits hit from these companies? I think it is an issue we're going to have to worry about in another quarter or two as inventories really start to draw down here. And we don't have much relief in sight for at least 6 months, I think, on the shipping side. The other concern is energy. I think there's an upside to energy profits and oil prices here that is going to potentially crimp some of the manufacturing profits down the road, just not yet. So I look for beats and upside in the fourth quarter, but certainly risks to margins in the supply chain out a quarter or two.